REN TV coverage of the 2013 ERMI Energy Risk and Insurance Conference is sponsored by WebCE. We spoke with Michael Ruehman from Wortham Insurance during the ERMI Energy Conference about the unique challenges facing risk managers today and his take on the current insurance market.
Yeah, when many of the rigs went down offshore, some of the drillers maintained their employees. Others unfortunately had to terminate some when rigs went idle with no prospect of hire. Activity, the underpinning activity with the onshore work that's taking place in the shale drilling and I would call almost the re-emergence of the Gulf of Mexico. More people are going back to work, more rigs are under utilization. I'm seeing telltale signs of returning to some level of modest health offshore when it comes to activity. Of course, most of that activity is probably held in the majors and the ultra deep water plays, and you certainly need a big pocketbook to be out there. But I think overall, our energy has a bright future. The outlook for the energy insurance sector, I think, is fairly good. I think some advantages can be achieved in some price savings. Market conditions on the first party side, I would say flat to maybe a modest reduction. The name windstorm for first party assets. Also, I think that the market they've earned a lot of money. There had many storms of late, and there'll be pressure put on the market to achieve some level of cost savings. I don't think it'll be a straightforward, just a spot on rate reduction off the bottom and away we go. It definitely needs to come through a restructuring of the program, and I think through restructuring you get the best opportunity of achieving more cost-effective renewal. The casualty market is still continuing to tighten. The past few years it's been tight. We've lost capacity, and it's been a challenge. Last year I was very hopeful that 2013 would be somewhat of a quiet year. I was hopeful that the market would find its grounding and its direction, but it still seems to be a bit scattered. We're losing capacity, prices are going up. The challenge, I think, today, get started early. Here in Texas with the Eagle Ford shale play, that gets a lot of attention, hydraulic fracturing. I think one of the risks that I urge our E&P and contracting clients to take careful analysis of is latent or gradual seepage pollution. I think some of what's been thrown out there I've heard it phrased as junk science as to whether or not we damage aquifers through that process. But then again, you buy a dedicated pollution program that is gradual in nature. Basically, it's a claims-made format. At least gives you a level of security to recover legal defenses. Because ultimately, I think that's what it may boil down to. Offshore, from the standpoint, the OPA mandates and the requirements, they have still stayed static. What this regulation has thrown back into the market, though, is that there, again, as I said, with the excess liability side, there's less capacity for OPA cover, and it's becoming more and more expensive. One of the main drivers of that cost and lack of capacity is that some underwriters, if not most now, are throwing their OPA writings in the same basket as their aggregated loss. So it reduces the amount of capacity they can put out. Hence, as something becomes less available, it becomes more costly. I think each year that we advance in the technology and the way these assets are constructed and how they're used, they do nothing but improve over time. Durability, its application, and then being as safe a work environment as possible. It's still a dangerous job to stand on the drilling floor or to be stationed out on a platform in the middle of the Gulf or somewhere around the world. But at the end of the day, I do feel like the measures that are in place have improved dramatically.
For more world risk and insurance news from the ERMI Energy Risk and Insurance Conference, visit the REN TV On Demand Library.